Hey everybody, so this is going to be the August week 1 and week 2 performance review for the Phoenix algorithm. So we're going to go into, just as we always do, the disclaimer, and then we'll look at how the Phoenix did for this 2-week period. So let's go straight to the disclaimer, and obviously you can pause the screen to read it if you want to look at it more carefully, but in essence, what this is stating is that I'm not a commodity trading advisor. We're what's called a third-party developer. We offer the algorithms under what's called the letter of direction. Remember that trading futures, it involves substantial risk of loss. It's not appropriate for all investors, and of course, past performance is not indicative of future performance. So let's go ahead and look at the performance now and see how we did. So this 2-week period was actually a little tough to grade for me. The reason why is we saw, in essence, the S&P rallied pretty strongly, as this chart kind of on the right shows. And you have to ignore the little circles. That's just highlighting some of the trades we had. But so you had the S&P going higher, but we did have the 10-year going lower. And again, the 10-year is our hedge against a down-moving S&P market. But what happens with a hedge, as is pretty normal for hedges, is that when an opposite condition happens, such as the S&P rallying, you do have to be prepared for the hedge to take some losses. And then in this case, we did. We took a little bit of losses on the 10-year, which kind of threw off some of the gains that we saw. Although on Friday it did rally, so it was actually not horrible for the 10-year, but it did close down from kind of the 30th of July, where we started this kind of 2-week period at. But the other drag on our performance was the day trade. So in the past few months, really the day trade has done almost nothing bad. I mean, it just kind of hit so many winning trades, trade after trade, and you can watch the videos from before that I did, in particular, kind of in early July or kind of mid-July. But that algorithm did amazing, and it's very common that when an algorithm like that has a good run, a lot of times that performance will cut back a bit in the following weeks. But of course, you never know when that'll happen, so there's no way to time it. So you kind of just have to ride it out. But in our case, the breakout, the day trade algorithm, it didn't really do that well, because what you had is a market that was rallying, as you see here, and this bottom left chart. And again, this is the day trade algo, but you have a market that's rallying. And we did have 3 trades, and normally if someone were to tell me the market rallied pretty strongly and you had 3 day trades, I would say, well, our performance is probably pretty good then. But in this case, it wasn't. We got stopped out of a trade early on, and then we had another trade on the 6th of August that was just slightly up. You can see that right here. And then the 3rd trade was on the 11th of August, where it was just a small loss. So those 2 were really break-even trades, but then we did have a stop out on the 1st of August. So when you look at the S&P now, that is one of the highlights from this week that actually prevented us from having a worse grade than a C. And namely, that's that this algorithm did incredibly well, especially in this last week. It did exactly what it's designed to do, and I'll kind of talk about that here in a second. But basically, what I gave the system, the Phoenix system, was a C, and that was because we were profitable by about $663. That's about 3.3% on that 20K unit size. So it actually was a pretty good week, or kind of 2 weeks, but it could have been better. The only drag was really this day trade algorithm that dragged on it a bit, and then the 10-year. Otherwise, we would have been up a lot more. But I kind of, if I was weighting each one of these, I might give the 10-year something like a 75%, because it kind of did what would be expected of it. It traded a little bit down when the S&P was going higher, but not too bad. The day trade would have been, maybe in the 60%, kind of a D. But then this one over here definitely would have been in the 90% or even higher, really, because what it did is it did have a number of winning trades. I believe it was about 6 in this sequence, and then we had a stop out here, and then another winning trade here. But what I want to point out is, you might remember a month ago, I made a very subtle change to this momentum algorithm, and it's really the first change that I've made to a target like that in a few years. So I don't make changes like this very often, but I wanted to highlight that, because a lot of you have asked, how did that change work out? Well, it worked out really well, because if you remember a month ago, we had on these kind of little gains where we get in and out the next day, those would have been about 4-point gains, which is about a $200 gain. But the change I made was to make these targets percent based, and what that did is it really kind of doubles the target on these. And so instead of 4-point targets, we have 8-point targets roughly when the S&P is at this kind of 4,000 level at least. And what that did is, as the market goes higher, it allows us to capture more of those gains. And so what I want to highlight is that was the correct move. You guys have asked, was that the right move? How is that change done? Well, it's done really well, because if we didn't have that change, then a lot of these gains would have been a lot smaller, and our returns would have been less because of that. So it turns out that change so far has definitely been the right move. It's allowed us in these uptrending markets to capture more of that move and kind of secure kind of positive returns as the market's going higher, which I think was something that was lacking kind of earlier in the year. And again, a lot of this is newer because the S&P is at this 4,000 level, where a year ago, it was at the 3,000, and then a couple years ago, even lower. And so, so I wanted to just highlight that. But overall, the Phoenix algo did okay. Another just sort of okay period. We got a C. It was profitable. That's good. The market was trending higher, and that's one of our better case scenarios. But as you know, those of you that have been traded this for a while, we don't necessarily rely on an up moving market. In fact, we don't. There's many months where the market is closed down, and we've had incredible months. And that's because we're kind of able to get in and out on the momentum. The day trade can capture these like kind of short covering rallies. But the main reason why we tend to do well in down moving markets is our hedge, which is the 10-year. And so when you put all that together, I would say that it was a decent start to August. We're definitely up in August so far, and my expectation is that we'll continue to add to the gains, and that hopefully we close out a real strong August. So thanks a lot. I know that on these videos I tend to kind of ramble a bit, so I apologize for that. I am trying to make them kind of like 5 minutes or less, but in this case it's kind of hard when I wanted to at least cover this change that was made so that everyone knows kind of what's going on. I've gotten a lot of good feedback on the videos. I know you guys appreciate kind of the commentary, and I know when I'm able to discuss it in this format, you're able to see a little bit more behind the logic behind the algorithms, how they work together, the way I think about them. So hopefully this is helpful. Again, I appreciate every one of you, and thanks so much, and looking forward to hopefully closing out another positive week in August, and then just adding to the gains that we saw in July. So have a great day and enjoy your weekend. All right, bye-bye.